Hey, and welcome back to Trades and Trends. $2 bills. Where are people even getting these days? They're kind of neat though. You don't see them all that often. This one's from 2017, and I have a couple from even in the 1900s. I don't know where people are still getting these though. Are they going to the bank and are they trading out for them specifically? I don't think they just distribute these anymore. Anyways, have you seen the S&P 500? It is just ripping into new all-time highs over and over. It is going exactly as expected. As I have mentioned previously, as long as the Fed continues to do exactly as they are expected to do, then we are going to continue rallying on upwards. As they ease the restrictions on monetary policy, it's only going to help fuel the economy and fuel the stock market into further and further all-time highs. We don't have any problem continuing to hold, continuing to look forward to higher and higher levels until the Fed suggests that they don't have a control on this anymore. Now, that's not to say that the Fed can't mess this up. And in the past, there has been examples of them, well, mucking it up. But so far, they seem to be managing pretty well, and they are being significantly more transparent than they have ever before. Jerome Powell has been at this for nearly 8 years now, 8 or 9 years. He seems to be demonstrating some pretty good fiscal policies, but we will see as we go into 2025 if this was all just for show or if we're truly looking at a soft landing. Now, changing topics to stock earnings, that is another thing that can interrupt this flow, interrupt these new all-time highs if these companies start reporting some not so great numbers. And we are currently wrapping up Q3. We've already had reports from JP Morgan and from Wells Fargo, which both did great. We have a whole bunch of other banks reporting this week. We have Netflix, we have some transportation companies, we have TSM. So we've got kind of a few different varying sectors, subscriptions, technology, transport, also reporting, and then of course we'll have even more next week. So the earnings season is really starting to kick off. So far it's coming on pretty strong. Also, in the meantime, we have Nvidia just $2 short, about 1%, 1.5% shy from brand new all-time highs again. I remember just a couple weeks ago, it almost feels like yesterday that it was down at the $100 level, 105, 106, and now we're all the way back up to basically breaking all-time highs again. So it would seem investors are very bullish on the prospects of AI and its adoption and its current demand. And I've also been seeing some headlines saying that the AI craze is not over yet. It's still running pretty hot. We will see. That will all be contingent on their earnings. And we know based on Nvidia's last earnings that they have to not just beat expectations. The expectations are already expecting them to beat. So they have to go above and beyond. They have to beat what they're already expected. They have to beat the beat. We will see if they can pull that off. So that's where we've been trending. Now, trade-wise, you know I have been purchasing Dell. You know I have been purchasing some Nvidia. I did start to get into a position there. And you know I've been purchasing Carvana, CVNA. And Carvana has been doing the best so far. Absolutely psyched to see the performance going on over there. I got in around the low 130s. I was waiting for it to come down a little bit more. And I got a little bit impatient, admittedly. I can be a little bit emotional at times as well and not wait for my perfect entry. And sure, it would have probably got me a little bit better price, but I just wanted to get in there. I didn't want it to move on without me. And there was a period there where I was in some drawdown when it had a pretty sharp decline, a little pullback to the 200 weekly moving average, but it bounced right off that and into the stratosphere. It is now in the 190s, and I have applied some trailing stop losses to lock in that profit. I cannot lose from here on forward. So I'm just going to let that position continue riding. If it hits my trailing stops, then I'm out and I'm moving on to the next thing. But that has been a great play, a great trade so far. I'm already netting about 43%, 44% profit or so on that. So just to show you the power of the 200 weekly moving average. Now, sometimes, of course, trades will be invalidated based off the 200 weekly moving average. You know, sometimes it works in my favor, sometimes it doesn't. That's just the risk and the role of each different trade. I look for that strong push above. I like to see a retest in the coming weeks afterwards. And once I get that retest, once I see it bounce back off that 200 weekly, then I know it should be a pretty strong move upwards. And if it doesn't, well, either way, we're setting a stop right below that 200 weekly, maybe a couple percentage points, 8 to 10% or so, and then just letting it ride. So Carvana has been doing its thing. They have not posted another earnings since they did last time, but the last earnings that they posted was just an absolute blockbuster. They came out revealing that they're netting some ridiculous amount of profits per vehicle, something like $6,000 or $7,000 on average. It was just pretty insane. Not sure if I'll be wanting to hold through their next earnings necessarily, but if my trailing stops have still not been hit by then might as well. So that's what I've got for trades. I'm not making any changes to those three main trades at the moment. Just going to keep on letting them ride and doing their thing. We got to let the magic happen. Got to let them grow and do their work. Now, moving on to takes. We did have inflation tick up recently by 0.1%. Now, not to be cause for alarm, but this is something that we will have to be extra attentive to going forward in terms of monitoring and kind of forecasting what the Fed might be considering doing in upcoming FOMC meetings. Now remember, the Fed has a two-part role, both balancing unemployment and keeping jobs growing and keeping people employed and keeping unemployment low and so on and so forth, but also maintaining the stability of the dollar and ensuring that inflation isn't getting out of control. Well, if inflation starts ticking back up little fractions of a percent, but meanwhile the job market is holding okay, we might not see any change. We might see the Fed continue to lower interest rates by 0.25% throughout the next couple of meetings. But if we see unemployment start to continue to rise just a little bit with layoffs and technology sector continuing to bleed, and we start to see inflation tick up by more than 0.1% or actually resemble some growth to its increases, then we might have a problem. So we will discuss that, of course, as soon as possible if it comes to that. We will just have to continue to monitor this data. I was a little bit concerned that if we started lowering interest rates that we could see inflation tick back up. In fact, I was really hopeful that we would not be lowering interest rates at all throughout the rest of 2024, not until going into 2025. But because of the somewhat not so great jobs data that was both being reported and apparently recorded, well, that seems to have forced the hand of the Fed, at least for the moment. So I am keeping a very close eye on what is going with economic data as it comes out and with what we can potentially expect the Fed to be doing going forward. So that is my update for all of you. Thank you so much for watching. Please consider liking and subscribing. I hope you're catching some of this market action. We are just having back-to-back green days and cannot get enough. Loving it. Thank you again. I will see you soon.